Hey guys, hope you're doing well out there. It's time to take a look at one of my favorite businesses to analyze, and that is Costco Wholesale Corporation, because on the surface, this is a very simple company and that's why I love it. But as you dig deeper, there's a lot of layers behind what makes Costco so successful as a business, because year to date, you're up just a cool 34% with this stock. Over the past 1 year, you're up a casual 60%. So as we get into their Q4 results, which came out after the market closed yesterday, shares are dipping just about 2% over the past week. Shares are down nearly 2.5%. So we'll take a look at what this quarter really showed us for Costco, all the predictability of this business continuing to stay there. We'll also take a look at some key metrics that Costco provides and analyze that. We'll of course get into the financials, which is very, very simple to take a look at. And then as always, we'll jump into the technicals. This is basically a monthly time frame for Costco, and there's not a whole lot of months where this stock goes down. We'll certainly peel it back on a closer time frame and highlight some levels where if you don't have a position in Costco, where it might make sense to maybe start one. If you're new to the channel, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Costco have been on a monster rally over the past 1 year, 5 years even, and especially over the last 10 years. You've done absolutely phenomenal with this company if you've held it over an extended period of time, because not just the capital appreciation, you also get a dividend with this one. And look, a 0.5% dividend yield, while on the surface looks small, it's like what I said at the top. This company has a ton of layers as you peel into their financials, and dividend growth is just one of those layers. This is a company that consistently pays out that one-time special dividend every, call it 2 to 3 years. We got one earlier on in this year, and just look at the consistent growth on this dividend, basically increasing that dividend payout by roughly 10 to 15% every single year. So while you do get a small yield on the surface, with that special dividend payout that you can expect every couple of years, your dividend growth is also looking quite nice along with this capital appreciation. Now, all of that comes with the numbers that this company puts up, and putting up nearly $80 billion of revenue in a quarter. That's not a small feat to do, and that's one that Costco has just accomplished. $80 billion was just 1% revenue growth year over year. It did miss estimates on Wall Street, which were higher by nearly 340 million. So a small miss compared to the large amount of revenues this company does provide. We'll also dive deep into the revenue figures, because look, this 1% revenue growth isn't telling you the whole story. From a bottom line perspective, you have GAAP EPS of $5.29. That came with a nice beat compared to what Wall Street anticipated. Now, I want to dive a bit deeper into the revenue figure, because look, this 1% revenue growth isn't a whole lot. In fact, it's not keeping up with inflation, and so on the surface doesn't look great. But what you do need to look into is the market share that this company is continuing to take from their competitors like Walmart, like Target. And consider the fact that this is a huge $400 billion company, yet they're still continuing to take market share. And one of the main drivers of that is comp store sales. This is an important figure that you need to pay attention to when you look at really any retailer. And comp store sales, when you exclude the price of gas and you also exclude foreign exchange rates, was up nearly 6.3% in the US and up nearly 6.9% on an overall adjusted basis. So despite a 1% revenue growth figure, you're growing comp store sales or same store sales by nearly 7%. So that is an important figure. On top of that, you're growing your e-commerce business by nearly 20%. Again, a fantastic rate of growth for this company that's already at a $400 billion market cap, putting up nearly $80 billion in quarterly revenue. So keep that in mind as you take a look at the revenue figures over at Costco. Also keep that in mind when you compare the revenue figures and revenue growth rates at Walmart and Target. Take a look at the comp store sales, probably not growing as fast as Costco, simply because they're losing out in terms of a comp store basis. Also on their e-commerce site, Costco is taking market share from these other retailers. The other thing you have to notice is profits that are still pretty good over at Costco will likely head higher in the next couple of quarters, because this company introduced a membership fee hike starting September 1st, and this is a quarter that ended September 1st. So this quarter doesn't actually account for the membership fee hike that they'll continue to recognize in the subsequent quarter, starting in the current quarter that we're in. And when we get to their financials, you see the membership fee income is basically straight profits that this company recognizes. That's one of the main reasons why they're able to discount their merchandise to such large levels, where they can continue to have higher foot traffic and really beat out competitors like Walmart and Target on a price basis, is because they charge that membership fee, which really drives their bottom line income. And so anytime they do a membership fee hike, which is, look, not very often, because Costco is heavily in favor of keeping prices low and passing on those savings to consumers. So they don't really raise those membership fees all too often, but when they do, yeah, that's a straight incremental jump into their net income. Now, lastly, they're also pushing heavy in the international side. Look, they're still very successful in the US and Canada and North America, really, but they're continuing to open up stores in Puerto Rico, in Australia, in Korea. They opened one in Okinawa, Japan most recently. That one got a ton of buzz and saw strong foot traffic as well. So this company is consistently pushing internationally, and they're proving to be very successful in international markets as well. That's really a place where I think Costco still has a long runway of expansion ahead of itself. Now, the one thing that keeps analysts busy is working out the valuation question with Costco, and that's certainly the thing that keeps me busy with Costco as well, is the valuation, because on a trailing 12-month basis, you're looking at a stock trading at nearly 54 times an earnings multiple. On a forward basis, you're looking at a company trading nearly 50 times an earnings multiple. So really, that valuation question is the only one that I need answered, is the only reason why I continue to stay out of this company. Because look, we just saw they have a fantastic three-headed monster in gaining market share, increasing their membership fees, and also pushing internationally. But the only thing is, you're paying a nearly 50 times an earnings multiple on a forward basis for a company expected to grow just 11% on that bottom line and right around 7% on that top line. Now, you are getting very consistent growth with this company. You're also getting a consumer base that's extremely loyal with their 90 to close to 92% renewal rate on those membership fees. So yeah, you have some very good qualities with this business, but I just have a hard time justifying a nearly 50 times earnings multiple at the current time, because there's a fair amount of risk baked into that. Certainly, if those membership renewal rates start to slip for whatever reason, or maybe Costco just simply can't control their inventory as well as they have, yeah, then this price to earnings multiple will come down rapidly. The stock will certainly be re-rated, because there's a ton of optimism currently baked into this name. And certainly I don't like to buy stocks when there's a ton of optimism baked into them. Instead, I like to buy them when there's a good margin of safety that's provided in the stock. And so certainly at the current time, I don't think the valuation provides that with that level of safety, because on a 10-year basis, basically on a max time frame basis for Costco, it's never traded this expensive in its history. And that's one thing I certainly don't like to see, is I like to pick up a stock when it's more closer to its historic average on a price to earnings basis, because again, then you have some room to actually expand that price to earnings multiple instead of jumping into a name that's already at a high price to earnings multiple when you initially buy it. Now, with all that being said, the revenues, the earnings, the operating cash flows, everything looks extremely steady, consistent, and predictable with this business, which is again one of the reasons why you pay a slightly higher premium to this company. Revenues of nearly $79.7 billion. That's on a quarterly basis. You see, at the same time last year, they also had the benefit of an extra additional week in this quarter. So you're comparing 17 weeks last year to 16 weeks this year. This was also their Q4. And so you're comparing 52 weeks in this year compared to 53 weeks in last year. So they have the additional benefit of an additional week in the year prior. Now, despite that, they're able to continue to keep those membership fees at $1.5 billion on a quarterly basis, nearly $4.8 billion for the last 12 months. I'll jump right down to the operating income. Off of nearly $254 billion in yearly revenues, they're spitting out nearly $9.3 billion in operating income. Now, what I want you to pay attention to is the percentage of your membership fees that make up your operating income. Because look, there's not a whole lot of costs associated with this membership fee. Certainly, it's a pretty recurring software like margin revenue stream that's incoming, and it makes up close to more than half of your operating income over at Costco. And so that's why anytime they increase those membership fees, that will mean a straight boost into your operating income in the future quarters. And look, operating income will certainly drive your net income, as this company does pay a fair amount of taxes and then generates close to $7.4 billion of net income over the last 12 months. In the most recent quarter, nearly $2.3 billion of net income. That's off of $3 billion in operating income. Again, more than 50% of that makes up your membership fees. So keep that in mind. That's one of the main reasons why this company is able to heavily discount those merchandises. They're basically selling those to the consumer at cost, because once you consider for the merchandise cost, once you add in your SG&A, that really basically makes up your net sales. And so they're not making a whole lot of margins on those merchandise revenues. They're instead profiting from the membership fees that basically gets you through the door at a Costco warehouse. Moving on to the balance sheet, nothing to be overly concerned about here. You have still $9.9 billion in cash and equivalents, down from same time last year where you were closer to $14 billion. But keep in mind, you did get that one-time dividend payout close to $18 per share. So anytime you see that one-time dividend payout, you can expect your cash to basically dwindle down a little bit. But over the next couple of years, you'll see the cash pile once again continuing to tick up as this company continues to generate free cash flow and really doesn't have a whole lot of use for that. Overall total assets staying relatively in line. This company not having a ton of debt, at least on the short-term side, and then long-term debt coming in right around $5.7 billion. So having more current assets than liabilities as well, a sign of a great balance sheet. From a cash flow perspective, we pull down that nearly $7.4 billion of net income. That's on a 52 weeks basis. That becomes close to $11.4 billion of operating cash flows. This company spends nearly $4.7 billion in additions to property, plant, and equipment. Not actually that much considering how rapidly and how large those Costco warehouses are. And so you're looking at right around $5 to $6 billion in free cash flow. What they do with that is they pay down a little bit of long-term debt to the tune of $1 billion. They pay you that dividend of nearly $9 billion over the past year, and they don't do a whole lot of share buybacks, which considering the stock levels at the current time is probably a good thing. So you're getting a majority of that free cash flow and more in the form of dividends, which again, very friendly for you, the investor. You get that capital appreciation. You also get those consistent dividend payouts along with consistent dividend growth as well. From Costco's technical chart, you really just need to look at it on a longer time frame. You stretch it out to an all-time chart, and yeah, this looks absolutely stellar. Basically tells you any dip, any significant dip really, is a buying opportunity in Costco. You certainly have levels down here in the 500s that would be a no-brainer of a buy. If shares of Costco come down to those levels, you're still a ways away from that. So I wouldn't say you'd have to wait all the way for shares to get back down there, because look, that would be a pretty substantial decline. I think you can still incrementally step into shares on pretty significant declines. I think the first level is down here close to this $800 level. You've been supported ones in the past before. That would be right around a 10% decline close to this $800 level. And look, if you want a 10 share position, you can probably just open a position at this point, maybe pick up half a share, considering shares are nearly $800 a piece. I think anytime you head lower down to the 750s, you can also step in incrementally. I think beneath that you have a pretty large channel, and so if you're really concerned about losing your initial capital, probably set a stop loss not much lower than actually I'd say $700 or $750, because at that point you can probably see a pretty big decline all the way down to maybe as low as underneath $600 a share. Now certainly at the current time you don't have a lot of upside considering this technical chart pattern. You're really hovering near the top end of your range, and so from a risk reward perspective, opening a position into Costco at this point really not that attractive. I would wait for deeper pullbacks. You'll certainly see that with this company eventually at one point or another you'll see that significant decline in shares of Costco, and considering this company has really been through it all over the past, call it decade plus, yeah, you'll be just fine with shares of Costco in my opinion. And so I think any major pullbacks in this one can certainly be bought. You're probably closer to the higher end of the range at the current time, and so for that reason I would wait from a technical perspective. I would also wait from a fundamental perspective, simply because you're extremely elevated on your valuation as well. So for that reason, I'm staying away from Costco. I do have this on my watch list. Any significant pullbacks, I'd say closer to 15% or more, I think that's your level to step into shares of Costco. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.